This week my account returned 10.45%, and in this video I want to walk you through exactly what happened in the market and how I approached my trades using order flow. So let's start from the beginning. Last weekend we talked about how gold on the daily time frame was forming a consolidation wedge right at a major trend line. That level needed to be tested. On the 24th, price broke strongly above 4,080, which for me was the bull-bear transition point. Order flow at that moment was very clear. Aggressive buying kept overwhelming the sell side, and that imbalance pushed the market higher. Then, on the 25th, the futures market opened higher, broke above the trend line, and from that moment my focus was on how price would behave on the retest. On the 1 hour chart, price kept tapping the trend line again and again. Each time the lower wicks showed sell-side absorption. That told me buyers were placing resting limit orders and absorbing shorts, which prevented any real breakdown. Then something important happened. A 177 lot big trade hit the tape, and price immediately held. That kind of aggressive buying at a key level is exactly what confirms a bullish idea for me. So for that day, the plan was simple. I was only looking for long setups. My first trade came right after that big trade. Price pulled back to the trend line, held it cleanly, and order flow supported continuation. I went long, targeted more than 2R, and the trade followed through nicely. As price continued to consolidate around the trend line, I paid close attention to where shorts were most heavily loaded. When you can identify those clusters, you can also identify potential support zones, because buyers usually don't want to let those shorts get out easily. Eventually, price came back down to test that area. On that first retest, I didn't take the trade, but once price reclaimed the level, it became a bullish reclaim zone for me, a place where trapped shorts would help support the move. On the next retest, we saw about 80 lots of aggressive buying, and the signal candle closed back above the level. I entered long. This one didn't work out. The signal candle had weaker volume compared to the previous ones, and buyers didn't follow through. It was a clean, planned stop out, totally within risk and part of the model. Later in the session, price came back again, but this time it dropped quickly into the level. Even though the signal candle was red, the lower wick showed a 92 lot aggressive buy with strong volume behind it. That was enough confirmation for me, and I entered long immediately. This trade paid very well. On Friday, CME had a temporary data outage, so I stayed out of the market. But I do want to highlight one setup from earlier that day. During the uptrend, price pulled back and aggressive buyers stepped in at the bottom of a candle. In moments like that, you don't need to wait for another confirmation candle. Order flow itself is the confirmation, and that's the edge. It lets you spot intention earlier and get better entries. If you're interested in understanding order flow and seeing the market from a more microstructural perspective, follow us on X and Telegram. We post daily levels, order flow summaries, and key price zones every single day. Thanks for watching, and I'll see you in the next recap.